Chapter. We're talking real money.
There is such a problem with the industry in which we work, the financial services industry. The fact is, there are way too many people doing things to you that they shouldn't be doing, and they do it to enrich themselves. And most of them don't rise to the level of horrific. They're just kind of they're just sort of unappealing.
It's gray. It's gray. It's not black or white. Yeah.
But every once in a while, a financial scam, an investing scam rises to the level of just disgust, where it just disgusts me. And you can think of the big ones like Bernie Madoff, but there are little ones that happen every day to people all over the country. So they're bad. It's bad enough when you get ripped off. But this recently came to our attention because it just recently was adjudicated. And by the way, welcome to Talking Real Money. I'm Don. That's Tom. We're here to today talk about affinity fraud. Not even affinity fraud. There are affinity bad deals, but this is actual affinity fraud. Now, I was not aware of all the details, and this is going to be a bit of a long story. But in the U.S. military, if a soldier dies,
on active duty,
yep, the quote Gold Star family is awarded $100,000 tax-free. In addition, military members often have subsidized life insurance.
Sure.
So that the families get something, because bear in mind, in most cases, the person who dies was a breadwinner of some sort for a family. So their income was critical to the family. And the future of that income is even more critical. It requires great financial advice to help make sure that money is invested and used properly.
And will last for a long time.
And will last the rest of their lives, and maybe their kids at least through college. So that is why the Army has a department of soldiers who work with grieving families and help them find great advice and deal with the people in the industry. And
now you say soldiers, they're civilians, aren't they, that work for the Army?
I'm sorry, I take that back. In most cases, they're former military.
Correct.
I should have said former.
They're civilian employees.
They're civilian employees, Army. But they were in almost every case because of the affinity.
Correct. They know the situation. They know people. They know, they understand. You're part of the military family, if you will. So you understand all that.
So a lot of former officers, particularly officers, apply for this position. They get a salary from the Department of Defense, and they provide help to these families. Well, there is a gentleman by the name of Kaz Craffey, a retired major.
Or Cars Craffey, he was also known as.
Yeah.
In case Kraz wasn't good enough.
He was an advisor to these families. Yeah. Turns out he was also, and didn't disclose, that he was an investment advisor or a registered rep, stockbroker kind of guy.
Which he was not supposed to do. You're not supposed. You can give the advice.
It's conflict.
But he's not even supposed to legally be able to then create an income from putting them in something. That was bad news. You're not supposed to do that.
Mm-hmm. So he was charged with a crime by the Securities and Exchange Commission and by the Department of Justice. And just recently, in April, he pleaded guilty to a ton of different crimes involving ripping off families, Gold Star families, with the investments that he recommended to them. And the investments he recommended, Tom, were appalling.
Well, yeah. Okay. But just to go back, so just to make sure everyone's clear, These folks came into money because of the loss of a loved one.
Right.
They trusted
He
Kraz,
was an Army financial counselor.
correct. And then he did them wrong and did them really wrong. I mean, listen, I'm just going to give you the high level numbers. You can go into the specific investments. Gold Star families lost over $3.7 million during the scheme. He, Mr. Craffey, pocketed $1.4 million in commissions.
Mm-hmm.
I mean, that should tell you everything you need to know, but the stuff that he put them in, and which you can further describe if you want. I mean, it's shocking.
It was
frankly.
a lot of individual stocks.
Correct.
It was, and he churned, and we don't talk about this term because most of the industry doesn't do this anymore.
No, it's
He
old school.
churned the accounts. He bought and sold and bought and sold and bought and sold and bought and sold on a regular basis. And he gamed the system because the financial services industry, even the shadiest firms, are examined by FINRA and or the SEC. So they look for these client information sheets that give the brokers and financial advisors are supposed to get information on your tolerance for risk, what your need for this money is. And he put down that everybody was a high risk investor when they in fact said they wanted a high degree of safety and income from this money.
So he misled there. He churned accounts. But what did he do to generate commissions of $1.5 million when people are losing $4 million?
It was
100%
turnover.
churning. Wow.
He generated it was less than a year on one account, 30, and this was from the court documents, 36% in commissions in less than 1 year, moving in and out and in and out and in and out of stocks, because every transaction in the regular brokerage industry, we're not talking about the discount brokers like Schwab and
Robin
Fidelity,
Hood, where you don't pay anything, right?
Right. This is with the bigger, well, not the bigger firms, the broker dealers who survive on commissions. They got a commission every time he made a trade. He was purposefully doing this to enrich himself.
Which that goes way past unethical, right? I mean,
it's illegal.
It's right of immoral.
No, he was charged with 10 different counts, including 6 counts of wire fraud. I am hoping the Gold Star families lost almost $4 million.
Yeah, it's a lot of money.
$9.9 million invested. $9.9 million
so
invested.
They lost half of their money.
Yeah, he got $1.4 million, but the rest of it they lost because the investments were bad. It was basically, he was, for all intents and purposes, he was the next best thing to day trading these people.
That's shocking.
And this goes to a bigger issue that we need you to be aware of. And that is, people trusted him because the Army said he was trustworthy. And I gotta tell you, living with a military brat spouse and working with a military brat co-host.
Yeah. Okay.
The military instills a high degree of trust in the chain of command. And I mean, it is absolute. It is like trust in God that you listen to. I'm going to give you a perfect example. When I lived in Colorado Springs and was a stockbroker, Debbie and I, we were both stockbrokers. We regularly had to help soldiers at Fort Carson get out of what were called contractual plans.
Yeah, those things are a nightmare.
These were mutual funds that in the first year had a 50% commission to the selling person. And in almost every case, the broker doing the selling was a retired non-commissioned officer or a retired officer who would go to soldiers and basically say, here's what I need you to do, soldier. And they would follow orders and do this plan that ended up over time only costing a mere 9% if you did it over the entire 20 years. But the first year of money you put in, 50% went to the broker and his firm. 50%.
Were you able to get people out of those?
Yeah, because the law, if you did it within a certain period of time, and I don't remember how long it was, I think it was 13 months, but it may have been longer. And I mean, Debbie was a pit bull. She
is a pit bull.
She went and fought for people who were over that limit and got money back. But it was
shows
the
you that,
affinity.
the affinity. Yeah.
Yes.
Because you're right. The military is a family in a way.
Yep,
and
it
by
is.
the way, I wasn't really a brat because my dad really didn't go back in
All
there
right,
with us.
you
I was gone.
weren't. But your dad was former military, and then
he went back in.
Instilled in you that
no question.
Respect for authority.
No question.
I see it in you and Debbie all the time.
Oh yeah, very much so. No
Whereas
question.
I was raised by parents who went, you're free
don't
range.
Listen
Go
to
do
him.
whatever you want.
Don't listen to that.
You can see you can see what a childhood does.
So, I mean, because this is something you hear about, not so much in the military, you hear it more about churches, affinity fraud.
Service clubs, social groups,
friendships, in some ways that people make decisions,
family relationships,
we're like, well, because Joe said that, and Joe's been, part of the church for the last 20 years, and Joe's worked for XYZ Financial. He got to know what he's talking about, right? And he's part of us. He's part of our group. So I'm going to hire him. My advice on that is, whether it's legal, whether it's financial, these things should be a business relationship. Now, I know many of you listening to the podcast hired Appella because Don and I, we know that.
It was affinity. I know.
And so in a way we're costing ourselves. But the thing is, we think, and I think we can back it up pretty strongly, that these are not our ideas. These aren't some whim that we've come up with. These are things that are informed, and we are informed. That doesn't make us any better, by the way. It just makes it that we're basing this on something, and we're ethical. We can say that unquestionably. We've turned away deals that we didn't think were right for the person. We just said, go buy that fund. It happens all the time, and that's why people have trusted us. But so the first one is, this just should be a business relationship. And you can always still have your church, your friendships, your social groups. And that brings me to number 2, making informed choices, because oftentimes people just take the road of least resistance. It's easy. I can go this way. I trust these people, and they don't want a research thing. They just rely on their judgment. They just rely on the fact that I know these people, that'll be okay. It'll work out. I think that's problematic. And then, Don, the other one that I think is just huge is, and this is going to be hard on us, never take anyone's word as recommendation for an investment. Don't assume. You can't just say, well, because they said it's right. You're going to have to do some legwork on any of these things and spend some time. And I know you're going to say, well, can't we trust the people in the military that are telling us this is the right thing to do? Apparently not. And the military was not paying close enough attention here. They deserve some criticism. The firm that he worked for, which I don't know, they deserve something pretty severe, and I hope they're going to have to give back some of those commissions.
The good news is Kaz Craffy, whatever his name was, Cars, whatever. He was permanently banned for the industry, and he's going to be spending a serious amount of time in jail. His firm was barred. I looked it up. The chief compliance officer was barred for life from the industry.
The chief compliance officer, you got to love that one. Yeah.
The CEO was barred for life.
Good. Yeah,
the only one who got away and went off to another firm, I think, was the CFO.
Because they know what's going on. They're looking at the accounts every day. They see stuff going in and out, and they know they're piling a bunch of that profit right in their pocket as well. So they're aware of all that. So, these things should be a business relationship. You've got to not always pick the easy way, and you've got to really don't just take anyone's word as for a recommendation. You got to look into things. That's legit. There's nothing wrong with that either, by the way, because oftentimes people say, well, but that's my brother-in-law, and I'm just going to go with whatever he says. And I tell people all the time, look, we're not here to break up families. That's your brother-in-law. I get it. I mean, Thanksgiving's, 5 months away.
We are here to break up the financial relationship.
That's the thing. And you need to make that decision for yourself. It is your money. It's your decision. And in this case, wow. I mean, to see those commissions, to see the mistreatment, that should open your eyes.
What's interesting is Congress is working on a new bill. Get this. You'd think they were already doing this. You'd hope they would. There's a new bipartisan bill that would require the Defense Department to verify that there are about 400 military financial advisors. They're going to have to verify that they don't have conflicts by submitting financial disclosures now.
That you think that would have been done for the last 30 years?
Exactly.
I mean, why would that just come up?
Wait,
Well, I know why it
would
comes
you
up now.
let people
Right.
give advice and not know if they had conflicts? DOD dudes.
Yeah, that's
Jeez.
bad news. So, yeah, I mean, affinity fraud, it'll never end because we all make friends with people and we end up trusting those people, right? Or we're all members of groups and we think, well, we're in this group and they believe in Joe, I'll hire Joe. But you just got to not take anybody's word for anything. Don't assume anything. And I think, again, have a business relationship when it comes to this kind of thing.
It absolutely, that's the key. It cannot be, and it cannot be a friend. People say, well, he's my friend. She's my friend. She wouldn't lie to me. For money, people will do all kinds of horrible things.
Have we ever seen that?
Yeah. Throughout our history as people, we do terrible things for money. And if you think a family member or a church member isn't going to screw you over, you are naive.
Yeah,
you really are.
That's the other part, though, is the gray of it. It's, again, so because somebody
it's not illegal, right?
Right. Somebody just came in yesterday. They're paying on a couple of mutual funds like 1.3, 1.4. Well, am I getting screwed? Well, screwed's a strong word. I mean, would I recommend you? No, you're not. That's fair. So yeah, these things, a little parsing sometimes can be important as well. All right. Great piece, Don. That was really good. So got time for a few questions here?
We do.
Okay.
My favorite part of the show.
This comes from Ted in Renton. Now, this is a little lengthy, so you got to listen to it. It says, Tom and Don, I love your show and have invested a considerable amount in the Avantis exchange-traded funds, but I'm also suspicious of financial experts that are not fiduciary. Since I've not hired you both are technically not required to have a fiduciary relationship or represent that your comments are in my best interest. Question, what confidence do I have as an investor that the funds that you both are promoting are legitimate? That's one question. You want to answer that one now or hear the rest of them?
One, we carefully, we have the opportunity to suggest, not recommend. We're not recommending. We're just giving you ideas that we think are decent. We have the opportunity to suggest any fund in the world, any ETF in the world, and you're just this is a trust thing because we can't prove this.
I was getting to that. Yeah,
we cannot prove that,
and we don't really know. I mean, Avantis there could be something going on there we don't know about. Sure.
Yeah, but it would be very, very difficult for Avantis to be doing anything shady because there is incredible regulation of mutual fund companies. So the fact is, the numbers they show you are vetted by a lot of people. And the numbers that they show us. Should you trust us without verifying? As we just said, no. Go look at Avantis's ETFs.
Well, that is one of his questions. Where can I find out what companies AVUV, their Avantis U.S. short small cap value fund, and AVGE, that's their global fund, have invested in? I think you go to their website.
You can go to their website. You can go to Avantis. And by the way, Avantis is owned by American Century Funds,
correct,
which were formerly 20th Century Funds, a big company. It's been around for decades. Very reputable firm. Again, could they be doing something bad and we not know? Yeah. Is it likely?
The question would be what?
No.
Because they have to show what they're invested in. Yeah, they have to. There's no way they could get at that. They are investing in the companies they say they're investing in because
and
that's
they file
record.
reports with the SEC.
Correct.
It's public record. The best resource we use a very unbiased, respected resource for all the information that we share with you, and that is Morningstar. Anybody can use Morningstar. You don't have to subscribe to use Morningstar. If you want more detailed stuff like I like to get, I subscribe, but you don't have to. You can go into Morningstar, and let's just do it right here. Go AVUV.
AVUV. The small.
Okay, let's use AVGE because that's the
global equity. Yep.
That's the global equity. Let's go in and see. And right here, Avantis All Equity Markets ETF. Now, what Morningstar has done has taken the public information that's available in databases. They put it up on the web. Expense ratio currently 0.23. The yield 1.84%. The portfolio consists of other mutual funds.
Right.
So
They own, it's a fund of
it's a
funds.
fund of funds. The
Yep.
funds they own are the Avantis U.S. Equity ETF, the Avantis U.S. Large Cap Value ETF, International Equity ETF, Emerging Markets Equity, International Large Cap Value, U.S. Small Cap Value, Emerging Markets Value, U.S. You see what I'm saying? There's all the information on them and the amount of data you can get here. The portfolio is 70% U.S., 30% international. The average price book ratio, which tells you what the value is under 2 when the index is way over 2. It tells you it's value oriented. So all this information we get from a trusted third-party source.
And that's the important part. That it's not even Avantis's information, which they are required to file. This is information from Morningstar, a source that has been around for, 50 or 60 years, that has built a reputation.
As longer than I've been doing this, because I used to, back in 1988, I had the Morningstar book.
I remember you had the book. So let's go to that page.
And every week they would send me new inserts
the
book with the new information.
Lord. The next question from Ted is it possible for you to set up a fund and investors find out later they are just scams?
No, not a mutual fund. It's almost impossible because of the very strict requirements of the Securities and Exchange Commission.
Now, you could make a private investment with somebody and find out it's a scam.
Not a public fund. Yes, private investments all the time. But to the SEC, once you get to a certain number of investors, and I'm trying to remember what the number is. It's like,
is it 100?
No, it's small.
I always forget I should have remembered that from the Series 65 test, but I apologize for not remembering it.
None of us remember that.
Yeah, that was a while ago. While you're doing that, I'm going to ask the third question because I think it's going to be easy to
absolutely
answer.
correct. It is 100 investor limit.
Hey, I pass again. I love it. Yeah. Thank you. That's good to know. Good.
So if they have more than 100 investors, they have to file with the SEC. And boy, the stuff that they have to file is voluminous.
Yeah. Then the final question from Ted is, what is the systematic formula used to apportion equities in AVUV and AVGE? I'm not sure I understand that question.
I think he's saying, how do you determine how much to put in each one?
Oh, well, AVGE includes AVUV in it.
Right. So technically, if you have AVGE, you don't need to do anything else.
But if you really want to tilt more to U.S. small cap value, then you could put, 20% in that and 80% in the global. I mean,
and that becomes a matter not of math, but of belief.
Yeah, that is.
And risk profile, risk tolerance, really.
Because you're amping up. You're
amping up the risk.
You are.
And that's just one of the most simple facts to remember about this whole process. We suggest that you overweight small and value, not because we know they're going to do better in the future, but because they have done better in the past, and 2, there's a logical component. Overweighting small companies and value stocks adds a level of volatility that is higher. Higher risk generally over time has been rewarded. So it's a matter of how much you put in AVUV versus just having AVGE. How much more risk do you want to add to your portfolio for the potential extra return? All
right, let's squeeze one more in from Linda in Visalia, California. Hello, Don and Tom, recent listener to the podcast, 80 years old, retired and taking required minimum distributions from my traditional IRA. I have traditional and Roth IRAs at Vanguard. I take advantage the qualified charitable distribution, the QCD. That's where you give money away from an IRA right to a charity.
And you don't have to pay taxes.
Love that. And after deducting the RMD, the QCD, and paying taxes, can I reinvest the balance in my Roth IRA?
No. Wait. Reinvest
taking the RMD. After deducting the RMD, the QCD, and paying taxes, can I reinvest the balance in my Roth IRA?
I'm not sure I follow the question.
That one sounds like a Roth conversion.
Yeah, it sounds like a Roth conversion. Right. Or are you saying, can I
just make a Roth contribution?
Yes, you can't make a Roth contribution without earned income.
Nope.
And you cannot. You
can make a Roth conversion.
Yes, but it's a conversion, and you're going to have to pay taxes
correct
on the money that you convert.
Very good. So It's,
Okay.
as
Then
I
I
say,
did get it right.
conflating there a little bit because we're kind of adding a bunch of things, and frankly, again, not that you're old, Linda, at 80 years old. I don't know that I'd be doing a lot of Roth conversions at 80. I just don't know that
don't
it
see
makes
the
sense.
benefit.
Yeah. Unless it's, I really want to leave this tax-free to somebody and my tax rate's very low.
No,
Otherwise, no.
I think what you're doing is perfect. You should just continue the QCDs, let the Roth ride as long as you don't need it, and that can go to your estate if you never need it.
I think that's perfect. Well done, sir. Great questions today and great answers.
Well, thank you, and thank you for your help, and thank you all for listening. And by the way, check out the road trip. It's coming up really soon.
Oh, I got my
Talking Real Money
marshmallows and
road trip.
we're going to have a campfire everywhere, right?
Oh, if we are able.
Oh, okay.
If you're allowed, we're going to have campfires, and we're going to be staying in
sing-alongs,
little campgrounds. I found the coolest campgrounds. Now, they don't have full hookup, so I have to do a full hookup one every once in a while. For obvious reasons, you have to dump your tanks.
Yeah.
Refill your tanks with water.
Sure.
But there are holy cow. I'm the next road trip after this one. In fact, from here on, I'm going to try to make most of my stops not in national parks, but in state parks.
Because they got the full hookup?
No, because they have the coolest little parks in places you would have never thought. Just beautiful parks that are about $20 a night.
Wow. I thought it was the fact you could dump it there, go to the next state, and they could never catch up with you. So maybe I had that wrong. So,
well, no, they have dump stations for that.
Okay. I don't know. I've never been through this. Had I purchased the home I was after, you could have just put it right in the lake, but that's
no. I now have the RV park at your house. So
please.
Did you get the neon sign yet?
I'm waiting. The giant rooster out there.
Yeah, the giant rooster flashing.
Let's just leave it at that. What do you say?
They call it a cock stop with the giant rooster. He's gone. He's gone. He actually, he dropped. He's gone. I guess that's the last show. Well, that was sad. All right. Thank you all for being there. We wish you well. Go to talkingrealmoney.com and check out the road trip and the stop. I'm not going to say again. Bye.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor.
Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services.
Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.